Hey everyone, it's Julie here with TipRanks. Today we're taking a look at 3 dividend-focused ETFs. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 ETFs, all with a focus on dividends. Now, ETFs are a great one-stop shop for investing as they offer a lot of diversification and exposure to a bunch of stocks in one place. And today's ETFs all focus on dividend-paying companies. While they do differ a bit in sector and focus, one thing in common is that they do pay a solid quarterly dividend. We're going to take a look at each of these ETFs, what their different strategies are, and of course, those top holdings. We found them using TipRanks ETF Screener, and that is found right under the screener menu. Here I did put in a couple of different filters, including a dividend strategy here, equity as far as asset classes, a moderate to low expense ratio, and a price target upside of at least 10%, and that gave us our list of ETFs below. First on our list, we're taking a look at the SPDR S&P 500 High Dividend ETF. It trades under the ticker SPYD, currently priced at $43.81. It is slightly in the red this past year, down 4%, but is up over 5.5% in the last 6 months. This ETF focuses on the top 80 high dividend yielding companies within the S&P 500. They select stocks that not only provide attractive dividend income, but also maintain a diverse exposure across various sectors, minimizing single sector risk and ensuring steady income potential. The fund's disciplined approach focuses on businesses with a strong track record of dividend performance, making it a compelling choice for investors looking to bolster their income streams while participating in the broader equity market. This ETF does have a low management expense ratio at 0.07% and pays out their dividend on a quarterly basis. Their last quarterly dividend was just shy of 49 cents for a dividend yield of 4.46%. That does fluctuate a bit quarter over quarter based on those underlying holdings. And as we mentioned, it has about 80 holdings, with assets under management of about $7.2 billion. Their top 10 holdings make up nearly 15% of the ETF. Looking at those top 10, it includes names like CVS, AbbVie, Best Buy, APA, Archer Daniels Midland, First Energy, Evergy, Edison International, Viatris, and Exelon. Scrolling down further, we can see the breakdown. Our top sector is real estate at 22%, followed by consumer defensive, financial, then utilities. This ETF is 100% weighted in the United States. While Wall Street analysts don't actually rate ETFs, TipRanks is able to look at the ratings on all of those holdings within it and come out with an overall consensus. This ETF comes in as a moderate buy. That is based on 51 holdings being rated a buy, 28 a hold, and 2 a sell. The average price target of $48 implies an upside potential of 10.5%. Down at the bottom as well, you can check out these stocks with the largest upside potential, as well as those with the highest downside. For our second dividend-focused ETF, we're looking at the VanEck Morningstar Durable Dividend ETF. It trades under the ticker DURA or DURA, currently priced just above $33 per share. It is also slightly in the red overall this past year, down 2.66%, but up over 8% in the last 6 months. It has an expense ratio at 0.30%, so a bit higher than the last one. This ETF focuses on high dividend yielding U.S. companies with strong financial health and attractive valuations according to Morningstar. This durable dividend ETF is tailored for those who prioritize stability and income in their investment strategy. It provides a unique opportunity to invest in a diverse array of sectors and industries, capturing the essence of the total market while maintaining a strategic emphasis on quality and durability. Their dividend is also paid out on a quarterly basis, and their most recent was just at the start of October at 22.5 cents for a dividend yield of 3.51%. The DURA ETF has 73 current holdings and is much smaller in size than our first ETF. Their total assets under management sits at about $43.6 million. And you'll see that they are much more heavily weighted in their top 10, making up about 46% of the ETF. You'll certainly notice some big names in this top 10 holdings, including Johnson & Johnson, ExxonMobil, Chevron, Philip Morris, Pepsi, Merck & Company, Verizon Communications, Coca-Cola, Altria, and Amgen. When we look at that breakdown down below, consumer defensive is our top sector at nearly 24%, followed by healthcare at 20%, then energy and utilities. This is also 100% weighted in the United States. And based on the ratings in those 73 holdings, we once again have a moderate buy, with an average price target of $37.80 for an upside potential of nearly 12%. Down below, once again, you can see a list of stocks there with the biggest upside and a couple with some downside. If you've made it all the way to our third ETF today, then do me a favor and make sure you've hit that thumbs up button. For our third dividend-focused ETF, we're taking a look at the Invesco S&P 500 High Dividend Growers ETF. It trades under the ticker DIVG, currently priced at $32.64. This one is actually in the green this past year, up 2.8%, and has gained over 10% in the last 6 months. They do have our highest expense ratio of the bunch at 0.41%. Similar to the first ETF, this also looks at stocks within the S&P 500. However, this one narrows in on the 100 constituents with the highest dividend yield growth forecast. They look at S&P 500 companies that not only demonstrate strong financial health, but also a commitment to returning value to shareholders through consistent dividend increases. They specifically target large cap stocks and focus on those high dividend growers, aiming to provide a unique blend of stability and growth, leveraging the reliability of established market leaders with the dynamic potential of rising dividends. So this ETF currently has 102 holdings and once again pays out their dividend on a quarterly basis. Their most recent quarterly dividend came in at nearly 10 cents per share for a dividend yield of 3.33%. And while this ETF is our largest in holdings, it is our smallest in total assets at just 8.4 million. And their top 10 holdings make up 19.5% of the total ETF. Looking at those top holdings down below, they're comprised of LyondellBasell, Conagra Brands, Pfizer, Altria, Bristol-Myers Squibb, Vici Properties, Oneok Incorporated, Franklin Resources, AES Corporation, and Prudential Financial. Looking at that breakdown down below, we have financial sector in the lead at 21%, followed by consumer defensive, utilities, real estate, and energy. It is 100% weighted in the United States. And looking at those analyst forecasts, we have yet again another moderate buy. The average price target is just shy of $37 per share for an upside potential of 12.5%. Down below, you can see our stocks here with the largest upside potential and those with the highest downside potential. So that is a quick look at 3 ETFs, all with a focus on dividend-paying companies. Let me know your thoughts on these 3 ETFs and which others you guys love lately. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock or ETF, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day. I'll see you back here next time.